Well, hello everyone, I'm back, the new proud American conservative with more important info not too many of you can stomach. So the good, the bad, and the ugly. The good news is stimulus checks are coming, okay? The bad news is, well, the good news most of you know, okay? Most Americans know this. Why? Because 30 million Americans are supposed to be evicted because they cannot pay their rent by September 1st. So this is just prolonged. The bottom line, over 30 million Americans will be out in the streets, which already we have homeless epidemic in America right now. And now add another 30 plus million this year. So if it's not September 1st, it will be by October 1st or November 1st, and possibly they can push it till December. That is about it, because you can see the fight, how hard it is to send out money to the middle class. It's like pulling teeth, but when it comes to corporate America, they get trillions of dollars, no problem. 2 trillion, 3 trillion. Just write a check, press the button, whatever method they use, it don't even matter. It's just unbelievable. It's sickening what is going on. The Federal Reserve printed more money in just 4 months now than they did entire period of Great Recession back in 2008. So that's all you need to know. This is nothing but money devaluation, money debasement. And once Federal Reserve loses control of suppressing interest rates, what happens then? The borrowing stops. Once the borrowing stops, the gig is up. It's all over. As banks, the Fed Reserve, they only rely on debt. The more debt it's issued, the stronger they get. Okay? So that's how the game is played. If they don't succeed hyperinflating this stock market, they will destroy the dollar. Okay? This is not an accident. This is by design, so you cannot win no matter what you do. And what I'm trying to say is, if you, let's say, the hyperinflation does succeed in a way, if you see a 401k now shooting from, let's say you had 20 grand in your 401k, and now it's at $50,000 or it doubled, it's at 40k, right? It goes up, but it does not go up as fast as the dollar, meaning your purchasing power goes down. It's such a sick game these banksters are playing. It's unbelievable, but a lot of people are not aware of this because of why? They don't teach about money in schools. You're not supposed to know this, okay? So how do you protect yourself against this craziness and credit implosion that's coming with all this? Which means when there is a credit implosion, as the interest rates go up, like I said, the banks cannot issue any more debt. This is where all the currencies are going with the credit implosion, meaning bye-bye your purchasing power. You were able to save a lot of dollars, which is nothing but a government-issued note, Federal Reserve note. It's not money, it's currency, it's a note. It's basically like IOUs. Once you find that out, you're gonna you won't even know what hit you. This is why I'm telling you guys, you gotta take this seriously, what I'm telling you. Yes, dollar is still king, even though the dollar index, the Dixie, is under pressure now, but it's still king, okay? You need dollars no matter what. But if you don't hedge yourself off against this money printing, against this madness, they printed more money in just 4 months than it took in the last Great Recession of 2008. Throughout that whole Great Recession, they printed more money, I believe close to $4 trillion in just 4 months, so $1 trillion per month. And we are not done yet. They're continuing to do so. So you're going to need more dollars basically to pay for same goods as you bought yesterday, okay? So prepare yourself. You got to hedge yourself off against the debt. When I mention gold and silver, people just run for their lives. They're just laughing at it. They say, well, it's so volatile. When you watch, the gold price was $1,100, not long ago. It can drop again. Yes, it can, but you got to understand, it's not that gold is volatile. It's the dollar that's losing its value. When you see gold at 1900, That doesn't mean gold gained in value. It means dollar lost purchasing power. You lost your purchasing power. This is what I'm going to keep repeating every single day when I do my videos so you guys can understand it, because you will not hear your financial advisors tell you this. Why? Because they don't make any money if they tell you to buy a kilo gold bar for whatever it is today, 60 grand. They don't make their cut on that. They do it in the stock market, okay? So you got to understand that this is this game, the way it's played, is made for an average person not to understand it, okay? And that's why we now have more and more average Joes missing, because they're basically just going into poverty. That's what's been going on. So please prepare yourself, hedge yourself off against the debt, hedge yourself off against this madness of money printing, and do your own due diligence on this. Take a look at it and go from there. An ounce of gold is over $1,900. I don't know where the price is going to be next, but that's not what you need to look at. You need to look at is, can you afford a gram of gold for 80 bucks? Can you afford 10 ounces of silver for about 250 bucks? What can you do in order to acquire these hard tangible assets in your possession? I suggest more than 20%, maybe 25% of your portfolio, of your holdings, of your bankroll, however you want to call it. But that's just my opinion. You do whatever you want, like I said. I'm telling you what I'm doing. I'm not telling you what to do. My stock picks are coming in on Tuesday. I cannot do the video tomorrow because I'll have my kids in the car all day. I'll be on a road trip for over 10 hours. And it's going to be impossible for me to do videos. That's why I do them outside, because I got lucky this time. Check this guy out. Knocked out. Couldn't even put a t-shirt on him. We just had to get out because things were getting pretty wild at the house. All right, guys. God bless you all, and we'll talk Tuesday. Take care.